announcement happening today. And with that, we have Interest Rate, my guinea pig. She's our mascot here, and we have her joining me today to predict where interest rates are headed. And she has correctly predicted the last few interest rate announcements by either holding rates steady or by actually forecasting a rate increase. So, way to go, interest rate. She's only gotten one of the last few interest rate announcements incorrect. So, we're going to have her either indicate no change, which is eating from here, or rates down, which is eating from here. So we'll see that in just a few moments here. But I want to go into what the rate announcement today is all about and why are we thinking what we're thinking is going to happen. And I think that rates are going to remain steady, just to get that out there. I don't think rates are going anywhere today. But I do think that there are a lot of indications that rates could be going down at any point in the future. And with that, I wanted to get into why that is. And inflation right now, it is coming down quite considerably. We are seeing inflation hit 2.9% as of last month. And I did a video about this, about inflation, in my most recent uploads there. And you'll see that I talk about inflation and where it's at and how it has been trending down overall. All right, you're doing so well there, holding on to eating the food there. All right, so we did see inflation heading down, and with that, I think that the Bank of Canada is not really going to increase rates today, and they're not going to decrease rates today because they want to get that inflation target to 2%. And it's once they hit that 2% goal is when they're going to be able to start decreasing rates. Now, we have been seeing a lot of layoffs in Canada, and with that, we should possibly see some rate reductions happening because of that. Wanted to get my guinea pig there. You guys can see her on camera. There we go. Get her going here on my TikTok channel. And if you are joining me here today on the interest rate announcement, we have my guinea pig. Her name is Interest Rate. She is here joining me today to correctly predict where interest rates are going. If she eats from here, there's no change. And if she eats from here, rates are going down. So we'll see that in just a few moments. And you're doing really well there. Awesome. I brought her in this morning. She had a little bit of a hard time getting used to the office, but she's gotten used to it pretty good today. So, okay. So we have a lot of articles saying that interest rates are going to come down. There's some articles saying that we have that the Bank of Canada is over with raising rates altogether, and that there's even Doug Ford coming out this morning saying the Bank of Canada really needs to start decreasing interest rates right away. And with that, we could see a lot of pressure for the government to decrease interest rates. There's also an article that came out this morning about how there is mortgage delinquencies in Canada and how they have surged 135% in Ontario. So with that, that is a huge increase in mortgage delinquencies. And when we see something like that, a lot of lenders are going to notice that, and they're going to have to manage that all now on their books. And this is going to cause a lot of extra admin work and things that they didn't really foresee needing to take care of. And now they need to take care of all that. So it's a lot of extra weight on the lenders to manage all these delinquencies. So we don't want to see that. The government is going to be pressured to lower rates because of things like this happening more and more. There's also articles coming out talking about credit card debt, how that has really increased, and how a lot of households right now, with the increase in housing costs, have been putting all these extra expenses on credit and using credit to get them through each month, as there being a deficit every month now from month to month. So using that credit available is becoming much more common. And we are trying to avoid that as Canadians. However, rates are just really high right now. And a lot of people are renewing into rates that are increasing their mortgage payments by $500, $1,000, and sometimes more than that per month. So I don't think rates are going up anytime soon. I don't think rates are going down yet either. I think rates are going to stay where they are at today. And if you're just joining me here today, my guinea pig, uh, I guess you could say mascot, is here today joining me. She's going to correctly predict which way interest rates are going to head. So let's see what she's going to say here this morning, guys. Interest rates will be released here in about 7 minutes at 9:45 a.m. In the meantime, let's see which way my mascot is leaning for. So we got here no change, and we got rates down. Let's see here. We'll just move this all into camera view. So rates down, no change. And eating nothing means, we can assume that eating nothing would mean rates are up. But I think she's pretty hungry here. So do you want some lettuce? Or do you want some hay? What are you going to go for? All right, she's pulling out the lettuce, guys. So interest rate is predicting a no change today in Canadian interest rates. This is on the books now. I'm calling it. She's eating the lettuce. All right, you really can't see that well, but she's eating the lettuce. So I'll get her to continue eating the lettuce there while we talk about why we think here at Canadian Mortgage Weekly, where rates will be not going anywhere today, and that the Bank of Canada will remain rates where they are at. And that is that we are still trying to combat inflation. It's only at 2.9%. It's still trending down, but overall, we are seeing still high inflation. And with that, the Bank of Canada will want to keep rates where they are at today to help combat that inflation a little further into the future months. But we probably will not see any rate reduction today because of that. And they will mention things like some layoffs probably, or growing, like there's a slowing in the economy. They'll probably mention something about that today and how that they'll monitor that going into the future. And we probably will see them talk about how if that continues to happen, and there will be further pressure on reducing rates in the future. So there you go. Interest rate is eating the lettuce this morning. If you're just joining me here today, we're going to have a live interest rate announcement from the Bank of Canada in just about 5 minutes here. In the meantime, we had interest rate correctly predict which way the rates were going to head today. We have her correct predicting no change, and we're going to see that in just a moment here on the Bank of Canada release here this morning. They're going to be introducing whether or not rates are going up or down or staying the same. And keep in mind here, we're looking at inflation down to 2.9%, but still pretty high. So that is quite a high of an inflation number. And we are also looking at unemployment rates. And unemployment actually didn't really go down anymore last month. It actually went up. But those are all government jobs. So I don't know how we want to look at those jobs that were created. There was nothing really created in the private sector. So yeah, inflation down to 2.9%. It's overall trending down. We saw it come down from 5.2% in February 2023. Now we're in February 2024. We're looking at a most recent inflation rate of 2.9%. We are definitely trending down on that inflation number. So I don't think the Bank of Canada is going to be decreasing interest rates anytime soon. We're still trying to get that 2%. All right, no update yet. Interest rates still correctly wanting to predict here that rates are going down. No, not rates are going down. She's not eating anything from rates are going down, from no change. She's eating all that lettuce, pulling it right out. And like I said, guys, there's articles coming out that there's mortgage delinquency payments. Those are on the rise by 135% here in Canada, specifically Ontario. That's the most recent number that came out. Doug Ford saying that the interest rates should come down here as well. Pressure from the provincial government to bring rates down. I don't see rates going down today. Not yet. Okay, there's a few more minutes here. If you're just joining me here, there will be a rate announcement here in just 3 more minutes. In the meantime, my mascot interest rate is predicting that rates are not going to change. She going for more lettuce. She's trying to pull out whatever she can there. And if you're just joining me here as well, I have a channel and I produce a lot of videos here where I talk about what's happening with interest rates, what's happening with mortgage renewals. And if you want to be kept up to date with all that information, feel free to like this channel, like this video, and just subscribe to my updates here. I try to release a video every day. And with that, it helps you with your mortgage process, and I would appreciate the follow. All right. And if we look at unemployment, if we look at those numbers a little bit more closely this month, just to see if that's going to have any impact on rates today. So the unemployment rate did go down 0.1%. So the unemployment rate's 5.7%. We were seeing a rise of unemployment since the middle of last year. Even though the rise was going very slowly, we were seeing a small rise. All right. So yes, we are seeing an unemployment rate at 5.7%. So again, I don't think there's going to be a rate announcement that increases rates this morning, but also I don't think there's going to be a rate announcement that decreases rates this morning either. My mascot interest rate is predicting rates are not going to change today. I have my heater coming on there, but let's just take a look here, see what is going to happen with interest rates here in just a moment. We should have the data here in just a moment here. What do you think, interest rate? Do you think you've correctly predicted that rates are not changing today? All right. We are going to have that news here. All right. So it is out here, and we have correctly predicted where rates are at today. Bank of Canada maintains its policy rate and continues quantitative tightening. So way to go, interest rate. You did a great job. I'm really excited that you correctly predicted the interest rates again. She's a great mascot, guys. Let's give her a hand today. And that's awesome. Good job, interest rate. So let's see what the Bank of Canada is saying in their most recent update here on their website. They did mention inflation numbers, 2.9%, as I mentioned, being elevated and remaining high. And they did mention that shelter price inflation remains elevated and is the biggest contributor to inflation. Oh, you're just going for whatever lettuce you can find in there, eh? Oh, great job. So they're talking about how the Bank of Canada continues to expect inflation to remain close to 3% during the first half of this year before gradually easing. So because of that, I think that the Bank of Canada is indicating that there could be an interest rate decrease, but not for quite a few months still, looking into late 2024. And that's the sentiment I'm getting overall from these comments here on the Bank of Canada website today, as they are releasing the numbers and the data for the Bank of Canada interest rate announcement. And if you're just joining me here today, the Bank of Canada is not raising interest rates. And we have here my mascot interest rate correctly predicting where interest rates are headed today. And that is no change. Okay, so that's exciting, guys. Bond yields have increased since January, and that's true. They did increase just slightly. I mean, if you look at bond yields really in all sense, looking at those right now. All right, where are we here? Bond yield 3.3386. So 3.386 is where the bond yield's at. That's a very big decrease actually from last night. If we look at last night, we were up at 3.5, and then earlier this week we were at 3.6. So quite a decrease since this news has come out. Bond yields pricing in possibly a rate reduction coming in sooner rather than later. So overall, I'm seeing that The Bank of Canada wants to reduce rates, but they're keeping it where it's at because of inflation. So, what do you guys think about that? Do you think that the rates need to come down sooner? I'm interested to know what you guys are thinking about interest rates. And if you think rates are coming down anytime soon, do you think it's a good time to get into the market while prices are where they are at? What do you think, interest rate? All right. So she's doing a great job today, guys. She's just holding down the fort, eating all the lettuce, all the no change in rates this morning. So what I'm seeing here over the next few months there is that we're seeing a next rate announcement coming up. I think it's April here. I'll bring it up. April 10th will be the next rate announcement here in Canada. That will be a Wednesday as well. We'll be covering that here live on Canadian Mortgage Weekly with my mascot, Interest Rate. She'll be joining me live on that day for our next rate announcement. Looking forward to that one. It's going to be a good one because as we get into every next rate announcement, there's that much more anticipation for rates to come down. And as these numbers come in for rates coming down, as soon as the Bank of Canada does start decreasing rates, there is a typical phenomenon, and that is when rates do start finally coming down, they come down pretty fast in Canada. And when they come down pretty fast, that relieves a lot of pressure in the economy pretty quickly, with additional cash flow being available to Canadian consumers because interest rate costs have all of a sudden dropped in Canada across the board for anyone that's on a variable rate mortgage. This is why it's becoming really popular right now for a lot of people to take a variable rate mortgage, because they are looking at getting that rate right now on a variable. And as rates come down in later this year to the beginning of next year, that they're going to experience those immediate payment reliefs right away as the rates do come down. So that's a bet, because if rates stay elevated, you're going to be paying a little bit more than what you would be paying now on a fixed rate, which a lot of people are taking still 3 to 5 year fixed rates because they think that rates are going to come down, but they don't really care about how long it's going to take and measuring all that out, that they just feel that by the time 3 years is done or 5 years is done, that rates will have come down hard enough for them to then lock in at a lower rate. So if you guys are just joining me here today, I have Interest Rate. She's my mascot here on my Rate Announcement Canadian Mortgage Weekly podcast, where we look at her just hanging out and either deciding whether rates are going down or rates are not changing. I don't have rates going up anymore as an option because technically I don't think rates are going up. I called it last year there when I did a podcast in, I think, October, that we hit peak rate. And that is still where I'm sitting at. I don't think rates are going up at all anytime for the next little while. Excuse me. And we have Interest Rate here correctly predicting that rates will be no change. So she pretty much ate all the lettuce. I mean, we got a little bit here. You want to eat these pieces or not so much? They're not green enough. She's a picky guinea pig today. Okay, so we're looking at inflation today. I was saying that before the Bank of Canada came out with these numbers, that they're going to think that inflation is still pretty high, 2.9%. That's where it was last month. And it was mentioned in their report here as they came out with no rate change today, saying that inflation remains high. But they are also mentioning that the reason why inflation remains high is because of elevated housing costs determined and caused by inflation. So that's such a catch-22 situation here right now, with inflation being high because of costs for housing, and that's kind of the whole culprit here. We're trying to bring down the cost of housing as much as possible. So talked about real GDP expanded by 1% after contracting by 0.5% in the third quarter. Consumption was up a modest 1%, and final domestic demand contracted with a large decline in business investment. So there is some case about the economy going up and then going back down, but really not really any growth or step back in the economy because it's overall very, very small growth and declines over the last few months that we're not really seeing any direction either way there. So I think that inflation will remain high, like they're saying, through the summer months and then start coming down towards the end of the year. Uh, Whether or not the Bank of Canada decides to decrease rates right away, though, when inflation hits 2%, or they hold on for a little bit longer, remains to be seen. A lot of people are saying as soon as we hit that 2%, there's going to be a rate reduction right away. But that's going to be really difficult for a lot of Canadians to actually realize because I think they're going to wait a little longer than when inflation hits 2%. Maybe one more rate announcement further along down the line before they cut rates at all. And the only thing that's really going to increase that any further is if there are a lot of layoffs. And if there's a lot of layoffs happen right away or all at the same time, there will be a lot of pressure from the government to stimulate the economy in some way through a rate reduction of some kind in the economy. And that's really going to stimulate rates as well. So if you're just joining me here today, I got my mascot interest rate. She's been correctly predicting the last few rate announcements. Today, she predicted no change on rates. And that's where the government decided to land on, was no change on interest rates today. That they're maintaining where rates are at today to continue quantitative tightening, which just is another fancy word of bringing inflation down a little further this year, and not really making any big decisions until that inflation comes down. And inflation right now is at 2.9%. So way to go predicting the interest rates staying the same today and there's no change. So that means prime rate right now is at 7.2%. So if your prime rate is at 7.2%, if you're on a variable rate mortgage, are you considering locking in right now into a fixed product? Is that where you're thinking right now? Like fixed products right now, we're seeing 3-year fixed products in the 5s. We're seeing 5-year fixed products get into the high 4s now. I just did a mortgage here for somebody in the high 4s. I don't have any more lettuce here. It's all gone. So there are some high 4s available now for the 5-year product. But then you're taking a bet, right? You're locking in for 5 years at a really good rate right now. And considering the last few months, it is a very, very good rate. But then you're foregoing any possibility of locking in sooner. So is that a way that you guys are considering if you're variable or locking in for a year or two? I just had a client lock in for 1 year because they think that that's all it's going to take for rates to really come smashing down. And they took a higher rate than the 5-year as a 1-year fixed and then used that as a bet to get rates lower next year at this time. So there's quite a large disparity between all clients. It really matters also how long you plan to stay in that home and what your plans are overall for the next few years as a homeowner. Do you want to move in 3 years and also do a new mortgage at that time? Do you want to move in 5 years and do a new mortgage at that time? These are all things to consider as you're deciding what to do with rates right now. But prime rate is at 7.2%. I'm seeing a lot of banks offer discounts to prime. So if you're a really good customer, you're going to get a mortgage at prime as a variable rate customer, or prime minus like 0.5%. You might have prime minus 0.75%. And there are some really good attractive mortgages at near prime minus 1%. We're approaching almost prime 1 minus 1% again. And those days are coming back soon because as rates come down, on the fixed side, there's going to be higher pressure to offer good discounts on the variable rate side. So it's a really cool place to be right now as a mortgage customer, because you're going to have some turbulence in the market going forward as to whether rates will stay the same or go down. And the variable and fixed are going to be very different for the next little while as well. So if you're just joining me here today, the Bank of Canada decided to keep rates where they are at. My guinea pig mascot interest rate correctly predicted where rates were headed. She wanted nothing to do with rates going down and everything to do with no change this morning. And if you're just joining me here today, let's give interest rate a hand for correctly predicting those interest rates here today by the Bank of Canada. Bank of Canada saying pretty much that inflation remains high and that they need inflation to come down before there's any talk of rates coming down. And I don't think inflation is coming down until at least the end of this year to that 2% target. So we're probably having rates high until about 2025 or the end of 2024. And if you're looking at getting in the market right now, if you're thinking of getting into the market, because rates on the fixed rate side have come down quite a considerable amount, if you did get a pre-approval last year at this time, this year at this time, you're going to qualify for way more money. Because rates have come down, you could possibly qualify for $40,000 to $50,000 more versus what you qualified for in 2023 at this time. And if you're getting a pre-approval today at a 5-year fixed today versus last year and qualifying for $40,000 to $50,000 more, then that puts you in a really good buying position right now, because there's a lot of people that have been waiting to get their house on the market, and they're just finally putting their house on the market and anticipating this really exciting spring market. So to get your house on the market right now before people realize that they have this extra borrowing power is a really great place to be, and getting your pre-approval done, because rates are not changing and they probably won't change until the middle to late of this year. So now, if you're just joining me here today, this is my mascot here, Interest Rate. She's my guinea pig. She correctly predicted that rates were not changing today by eating all the snacks in here and totally avoiding the rates down section. And she pretty much didn't do any rates down at all. So rates were correctly predicted that they were not changing. Bank of Canada coming out that rates are not changing as well. And that came out here just about 12 minutes ago. The inflation rate's at 2.9%, not going anywhere. It's pretty sticky. We probably will see rates where they're at for the time being until inflation goes down and until even layoffs continue to rise even further. So there was some talk here that I heard that all the new jobs in Ontario, Canada, I'm not sure where it was coming from, and I would love to hear someone else back this statistic up, that all these new jobs are from government jobs, and then if we look at the unemployment rate and take out these government jobs that were recently created, that the unemployment rate did go up actually. So interesting news on that end. So if you have any questions, and if you're a mortgage customer looking for some guidance, please text or call me anytime. I can be available to chat about your mortgage. Like my videos, follow my channel. I would love to be able to give you more videos. I try to do these videos once a day and come out with updates about your mortgage and getting the mortgage approval process done. If you're just joining me here today, rates did stay the same. We did not have a rate increase today. And I'm here on Canadian Mortgage Weekly, Canada's weekly mortgage news video podcast. My name is Joe Bladdock. I'm a mortgage broker with 14 years financing real estate experience here in Ontario, Canada. I would love to give you some advice here on your mortgage. We are joined here by Interest Rate, our mascot today, who correctly predicted rates were not changing today on Canadian Mortgage Weekly. So big hands to her. She's going to get another piece of lettuce when she goes back to her home cage there. And if you're just joining me again, rates did not change. So prime rate will stay at 7.2%. And we will not see any changes for any rates until April the 10th now is the next interest rate announcement here. And we'll follow that here live on Canadian Mortgage Weekly, Canada's weekly mortgage video and mortgage news podcast. What a tongue twister. And we'll have interest rate back here again. We'll see if she correctly predicts whether rates go up or rates go down. So let's see. Do you want to eat this one? Are you still hungry? It's pretty exciting stuff. So I know following interest rates can be a pretty exciting thing. I try to make it an exciting thing here today with having my mascot join me. Thanks for joining me here on Canadian Mortgage Weekly Live. And feel free to reach out to me after this episode. And if you're watching anywhere in Canada, reach out to me to ask me any of your questions. hopefully I can connect you with some solutions. So I hope you have a great day, everyone. And thanks for watching Canadian Mortgage Weekly.